FICO, or Fair Isaac Corporation, a company that provides lending institutions with credit scores to help lending decisions, is arguably one of the companies with the strongest competitive advantages or moats in industry worldwide. Investors are interested in this company primarily because of that fact, and they're asking me, what do I think about FICO? Do I think it's a buy? What's the latest developments? I'll answer those questions in this video. This is an interesting company to cover for me because of that strong competitive advantage. I would love to get this company at an attractive price. So let's take a look if that's the case right now.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in its most recently completed quarter, FICO reported third quarter revenues of $536 million, which is up over 20% from the same quarter last year. GAAP operating income of $182 million was up 44%, and earnings per share was up 47%. If you divide the $182 million of net income by the $536 million of revenue, you'll notice a solid net profit margin for the company in the most recently completed quarter and in recent years. And over the longer term, this is a very profitable company that generates increasing and expanding margins, primarily due to its competitive advantage and the pricing power it retains against its customers. The company also generated free cash flow of $276 million, and it used a lot of that cash flow to repurchase shares in the third quarter. The company has secured adoption from institutions representing over $313 billion in annualized mortgage originations and approximately $1.52 trillion in eligible mortgage portfolios under servicing. The company is highly integrated in the U.S. mortgage industry, and lending institutions that make decisions about giving consumers home loans use FICO's score to determine what interest rate and how much credit to offer customers. FICO's low price compared to the overall purchase decision makes it an attractive purchase for lending institutions. These companies are making decisions about hundreds of thousands of dollars and sometimes millions of dollars in loans, and they have to pay FICO a small fee every time they get a score for a customer they're thinking about making a decision for. That allows FICO to continue with consistent price increases, and given its performance in the score that it offers and the lending institutions, reliability and the trust in FICO's score, it's given the company a strong foothold in this industry. Now, there are some innovators and disruptors aiming to penetrate this market. If you've been following my channel in recent days, Upstart, which is a company that uses artificial intelligence to make lending decisions, is gaining good traction and gaining market share, and I recently upgraded that stock to a buy. Now, it's very early days for Upstart, and they have a very small market share in the markets that FICO operates, but it's just one example of an innovator and disruptor that could come in and challenge the stronghold that FICO has retained. I mentioned how strong of a competitive advantage FICO has and how lucrative their profit margins are. The trouble for investors? It's no secret to the market. Investors have discovered FICO stock long ago, and they've bid up the price of this stock. FICO is not selling at a cheap. In fact, I would argue this stock is trading at an expensive valuation. The current market price is $1,524, and the intrinsic value I calculated is $1,047. Now, FICO stock boasts a beta of 1.35, and you could argue, and I would agree with you, that this beta could be adjusted lower because it doesn't reflect the strong position the company has in the industry. However, the stock price has been more volatile than the average stock in the S&P 500, and so that price risk is reflected in the company's beta. If I were to adjust the beta lower, that would create a higher fair value calculation, which would make the stock look more attractive. However, as it stands, I don't like FICO stock at the current market price. I love the company, but I would wait to get this at a lower price than where it is today.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now
that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.